Federal government announces the boldest changes to the mortgage industry that is going to restore home affordability for Canadians. Have they? Today I want to talk about, quote, the boldest reforms that they've made, and then ultimately, materially, what they mean for Canadians. So the first thing that the federal government has changed is the amortization period, which is essentially the length of time that an individual has to pay off that loan. It's gone up for first-time home buyers from 25 years all the way up to 30 years. Essentially, the meaning of this is that typically whenever an amortization period is longer, let's say 30 years, for sake of argument, essentially they're going to have lower monthly payments because the length at which they're paying back that loan is longer, versus if it was 20 years or 25 years, which has been the standard norm when buying a house, is that the payment might be a little bit higher, but because you're paying it off in less time, you're going to be paying less interest. So that's the first thing that they've done, and ultimately what this is going to do is it's going to allow more people to qualify for a little bit more on their mortgage, because it's going to allow them to spread that amount over 30 years rather than 25 years, but then also secondly, lower their monthly payment. And so the second thing that's happened is the federal government has raised the cap on insured mortgages from $1 million homes to $1.5 million homes, which is kind of crazy considering the fact that the federal government is now acknowledging the fact that homes are now up to that price of 1.5. Typically, whenever someone buys a new home and they're a first-time home buyer, if they put down in between 5 and 20%, they'll typically get an insured mortgage, pay that insurance premium. So I'm going to show a chart here of what this might look like in practice if you're buying a condo for, say, $649,096 using a 10% down payment and getting a 5-year fixed at 4.09%, which is the current rate at the time. You'll see that the monthly payment difference goes from $3,198 all the way down to $2,895. Now, rates change all the time, but I'm keeping a rate of that 4.09. It's going to assume that the total interest rate difference that you're going to be paying over that time as well, and I think this is noteworthy for Canadians to know, is $82,827 indeed, with getting a higher amortization period. The positive is that it clears up cash flow right now in the sense that you have a lower monthly payment. Unfortunately, because you're paying that back over an extended or longer period of time, you're going to be paying more interest over that period of time. In a second example, we take a look at if somebody were to buy a house for a much higher price in Toronto at $1,082,200. If it is an insured mortgage under the new rules and you're putting down in between 5 and 20%, because it's insured and you're paying an insurance premium, your interest rates will be a little bit lower. So for the upper non-insured mortgage, you'd be getting 4.79 as a mortgage rate. For the insured mortgage, which is down below, you'll be getting 4.09 as a mortgage rate. And so you could see the difference in the down payment that you'd be putting down to the column to the right. So for the non-insured mortgage up top with the 4.79 rate, you'll be putting down, about 20% of that. So $216,440 versus for the insured mortgage where you're putting down in between 5 and 20%, here it's 7.69, you'd be looking at $83,220. That's only 7.69% of the purchase price. But you can see here that the monthly payment is not all that difference. Obviously, there's a little bit of a difference in the mortgage rate there, but because the mortgage amount is so much higher, you're going to be paying so much more in interest. And the other thing is, because it's a 30-year amortization, you're going to be paying interest for 5 years longer. And so ultimately what the reality is for that, $173,180 difference in a mortgage amount and 5 years amortization, you're going to be looking at $144,754. And ultimately, all these changes don't necessarily make it so that Canadians can afford more. It doesn't make it so that housing prices are going down. It just makes it that qualifying for those mortgages, if you have the income to do so, is now easier. Now let's have a look at what some press is saying about this. First, we'll start with some positive comments about it. On Canadian mortgage trends, there's an Edmonton-based mortgage planner with mortgage architects that's been saying essentially buyers will be able to purchase a higher priced home, here $1.5 million, with a down payment of $125,000 rather than $300,000 if they're in there. But again, how many people is this really going to reach? This is only going to be good for those that can already qualify and are making enough money to qualify, rather than restoring affordability for those that can't. Restoring affordability is simply an equation of, are we increasing supply comparatively to demand? So to exemplify that, Ron Butler from Butler Mortgage illustrates that it's likely still not going to restore affordability in of itself. And in fact, many Canadians are still going to need co-signers with parents so that they could boost their total income on the application. Others have said that this is simply an easy fix from the federal government to jump in and say that they are, in fact, restoring affordability and then cater to younger homeowners. And so ultimately, what this shows us is to really reach that home affordability, we just need more homes built. Approval times need to be reduced. In the Greater Toronto Area, for instance, it takes over 20 months for the average condo to be approved. Costs need to go down. So between the beginning of COVID through mid-2023, the CPI for the construction industry has gone up by over 50%. That's because of construction shortages, lumber has been up, steel has been up, et cetera, et cetera. Interest rates have also been up, and so hopefully as interest rates go down, it's gonna help affordability for some developers. And lastly, we need to streamline how builders get their permits. So what do you think about this new news? Do you think that it is indeed gonna help restore affordability? Or do you think that more needs to be done by the federal government and other branches of government? Put your thoughts below.